Hello and welcome to the Business Standard Morning Show. I'm Ishan Gera and here are the stories for the day.
What the world needs now is people who see flight a little bit differently. Because seeing a better connected world isn't far in the future. We're building it now. GE, building a world that works.
Last week, two curious events highlighted how power outages are affecting people across the social divide. In Maharashtra, Chief Minister Uddhav Thackeray was briefly locked out of a virtual cabinet meeting due to it. And about 600 kilometers away, in a dusty Indore village, two sisters ended up taking wedding vows with wrong grooms. The situation was salvaged in both the cases later. But can it be done for small and medium industries, which are already reeling under high input cost and tepid demand? Our next report offers a peek into how industries in some big North Indian cities are bearing the brunt of power cuts since the onset of summer.
India's small and medium businesses had only just begun to recover from the economic impact of the pandemic and a geopolitical crisis when an early onset of summer and recurring heat waves across North India paralyzed them again. Demand for electricity shot up beyond expectations, leading to a nationwide power crisis. With coal stocks at a critical level at many thermal power plants, states found themselves in a desperate situation, resorting to unscheduled power cuts. While the bigger urban businesses are managing somehow, small businesses and residents are not as fortunate. A series of ground reports by Business Standard across northern and western India chronicled the plight of MSMEs in Surat, Manesar, Kanpur and Jalandhar, where power shortages made the matters worse for those already struggling with production lags and high prices of raw materials. Haryana's Manesar has been experiencing regular power cuts in industrial areas, forcing major industries to turn to diesel generator sets for backup. With soaring fuel prices, even major automakers like Maruti Suzuki are feeling the heat. Surat, Gujarat's textile hub, is facing a labor shortage as many workers have gone back to their hometowns. Instead of the usual production of 40 to 45 million meters of fabric per day, Surat's textile industry was producing roughly 30 million meters per day as of the second week of May. Making the situation worse, power cuts in the city brought down production by 10%, according to industry estimates.
Due to the power crisis, industry is facing staggering of 1 day, and because of that, the overall impact on the production is about 10% loss in the production. Coal supply crisis and the coal prices, this is going to remain for around 2 more years. And this is not only for, say, Surat, Gujarat or India, this crisis is all over the world. So my request to the policymakers and the government is to come out with a good solution of renewable energy. They have to redefine the renewable energy policy.
For many small businesses, April is a time for peak production, but power outages have brought their dreams crashing down. While most are struggling with deep losses, some are being forced to shut down.
कोल की जो इनपुट कॉस्ट है हमारी, वो करीब ऑलमोस्ट डबल हो चुकी है और पूरे जो हमारी टेक्सटाइल इंडस्ट्री है वो इम्पोर्टेड कोल के ऊपर डिपेंडेंट है और जब से रसिया और ये यूक्रेन का इश्यू हुआ है तब से कोल की अवेलेबिलिटी जो है वो बराबर नहीं है और उसकी प्राइस बहुत हाई है। डाइज और केमिकल में भी ऑलमोस्ट 25, 30, 40% जितना बढ़ोतरी है और कुछ जो केमिकल्स है जैसा सोडियम हाइड्रोसल्फाइड ऑफ सोडा है और या डिस्चार्जिंग एजेंट है, सेफोलाइट है या टेंगोलाइट है, उसमें तो करीब समझो कि 100% नहीं लेकिन 140-50% उसमें प्राइस बढ़ी हुई है। तो ये सब जो इनपुट कॉस्ट है उसमें काफ़ी कॉस्ट बढ़ा हुआ है और मार्केट में जो डिमांड नहीं है इसकी वजह से ये हम लोग भाव बढ़ाना भी इतना इजी काम नहीं है।
Amid a coal shortage, the textile industry, though largely resilient against power cuts, is also struggling with rising prices of coal. a near doubling of the cost of imported coal is impacting value chains. The situation for leather businesses in Uttar Pradesh's Kanpur is no better. Here, power has to be supplied non-stop since any disruption could cause a loss of the raw hide. With no alternative, anyone who can afford it has had to move to diesel gensets amid rising energy costs.
अभी कोई यहाँ घोषित कटौती तो नहीं है, लेकिन अघोषित तौर पे यहाँ दिन में 5-6 मरतबा बिजली चली जाती है और जिसकी वजह से हम लोगों को बहुत दिक्कतें हो रही हैं। हमारा प्रोसेस जो चलता है कंटिन्यूअस है, जिसमें डाई का केमिकल पड़ते हैं और तमाम पड़ते हैं। तो जब एकदम से बिजली जब चली जाती है तो हमारा जो मटेरियल है वो वेस्ट हो जाता है। दाम जो है बिजली के पूरे इंडिया में हमारी जानकारी में ये है कि सबसे ज़्यादा हाईएस्ट रेट यूपी में है बिजली के इंडस्ट्रियल यूज पे। तो इसको भी कम्पिटिटिव रेट में किया जाए ताकि हम लोगों का जो प्रोडक्शन है कम्पिटिटिव हो सके।
In Kanpur, 262 tanneries account for over 50% of India's leather output. Let's turn to Jalandhar, Punjab's export hub. The industries here are also struggling with major power shortages and are worried that the situation could worsen in the coming months. Businesses outside the industrial belt have regularly been subjected to unscheduled power cuts, and the heavy machinery-centric operations are turning unsustainable to run even on power backups for most MSMEs.
I'm standing here in the industrial focal area of Jalandhar, Punjab, a state that has been in the middle of the ongoing power crisis. Between a new government and upcoming agricultural demand, industry remains uncertain as to what is coming ahead for them. While the bigger industries have been trying to accommodate the power cuts by using diesel generators, MSMEs have not been so fortunate. Manufacturers are struggling from the lack of productivity, while workers are struggling from the lack of pay resulting from the power cuts.
With the paddy sowing season nearing, electricity, if not managed, would soon be diverted from industry to the agriculture sector. Industry bodies in Punjab fear that the new state government might not be prepared for that situation. If the power crisis was not enough, industrial workers in Punjab and Haryana are also facing a health crisis since last month. Unprecedented heat waves are making daily wagers sick, and labor-intensive businesses are uncertain how to deal with this double whammy.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
But the government on its part is trying to steer the industries out of this current crisis. It has pressed more rail rakes into service to meet the scaled-up power demand. Meanwhile, Air India's new owners too are trying to lead the debt-ridden airline out of the current crisis. They're bringing aviation veteran Campbell Wilson on board for this. As the new chief of Air India, Wilson will have his hands full. But who is Campbell Wilson and how his 26-year-old aviation experience may help the turbulent airline? Let us find out.
Over 100 days and a failed attempt later, the Tatas seem to have finally found another expat to steer the loss-making Air India towards a profitable business. The Tata Group has roped in 50-year-old Campbell Wilson, the CEO of Singapore Airlines' long-haul budget unit, Scoot. Singapore Airlines is also Tata's joint venture partner in Vistara. After their takeover in January, Tata's first choice to lead Air India was former Turkish Airlines chairman İlker Ayçi. But the choice ran into some trouble back home due to Turkey's strained relations with India. The row ended when Ayçi declined to take up the responsibility. Meanwhile, Air India chairman N. Chandrasekaran described Wilson as an industry veteran who had worked in key global markets across many functions. Singapore Airlines Group CEO Goh Chun Pong said that while the group was sad to lose Wilson, he was going to Air India with their full blessings. Wilson said in a statement that Air India aimed to become one of the best airlines in the world. He said that he was excited to join Air India and Tata colleagues in the mission of realizing that ambition. Air India will have to wait at least a month before it hands over the responsibility to Wilson. His last working day at Scoot is June 15, and industry observers do not expect Tatas to face hurdles in obtaining a security clearance from the Union Home Ministry for him. Wilson started off his career as a management trainee with Singapore Airlines in 1996 in New Zealand. He then worked for the group in Canada, Hong Kong and Japan before returning to Singapore in 2011 as the founding CEO of Scoot, which he led until 2016. He then served as the Senior Vice President, Sales and Marketing of Singapore Airlines, where he worked on pricing, distribution, e-commerce, merchandising, brand and marketing, global sales, and the airline's overseas offices, before returning for a second stint as the CEO of Scoot in April 2020. By then, Scoot had merged with the group's short-haul low-cost airline, Tiger Air. Scoot has a major presence in India, and so does Singapore Airlines.
A lot of factors need to click for anyone to come on a position like this. The first thing would be, obviously, the person concerned needs to have aviation experience. Second thing, they need to have worked in a strategic management position, basically, not just in an operational role. So with Campbell Wilson, he's got these experiences. He's also got the experience of being the founding CEO of Scoot. He's gained the experience in how to build an airline from scratch. Combination of these factors would have been making him the choice for the Tata Group. Does he have turnaround experience or not? I can tell you that founding an airline from scratch is basically, you will require some of the same skill sets. Air India needs a leader who's firm, but who's also approachable. He has the sharp mind that is required to run an airline. Singapore Airlines is not on board with the, with Tata's trying to go ahead and acquire Air India. Singapore Airlines did not want to join them at that point of time. I believe as things in the world of travel and aviation get better, they might find the money to join this business, or they might be eager to come on board in some way or form. And having Campbell on board could be a great way to start that, because Campbell has left the Singapore Airlines camp, but that does not mean he does not know people there. He could get both sides on the table.
The incoming CEO will also have to work towards paring Air India's $2 billion debt, refurbishing its fleet, improving service quality, and rationalizing its routes. What would be his immediate challenges at Air India?
The first thing would be obviously to get used to the culture, I think. Air India might still be coming off the block as, if I may use the term, a little sarkari or a little bureaucratic, I guess. Change in the Air India culture will obviously change as new people come on board and so on. Immediate challenges for him would be that the Air India, the product, the aircraft, which obviously people buy a seat on, are in very bad shape. There are some aircraft which are new and hence good, but a lot of the aircraft are in very bad shape. Buying new aircraft is a very costly affair, and it's a long-term solution to the problem. In the short term, he will need to fix the current aircraft. Any aircraft has 25-30 years life in it at the minimum. And these are like, the 787s, the 787s, they're only about, at the most, 10 years old. These aircraft have been just kept in very bad shape. So if they're going to be able to fix them, maybe buy new seats, buy a new in-flight entertainment system, fit internet on board, they can do wonders with these aircraft. They don't really need new aircraft, especially coming from an airline which is in financial distress.
Tata Group has been beefing up Air India's top management as a precursor to the CEO's appointment. Suresh Dutt Tripathi, who headed HR at Tata Steel, was appointed as Air India's Chief Human Resource Officer. Rajesh Dogra, a TCS veteran who headed the Passport Seva program, is now head of customer experience and ground handling, while Satya Ramaswamy, former head of strategic initiatives at Tata Digital, is now the Chief Digital and Technology Officer at the airline. This is the first time the airline will have a chief digital officer as it looks to improve its tech backend. The rejig team will help Wilson in executing his vision and whatever turnaround strategy he may have for Air India. Wilson has 26 years of aviation industry experience across both full-service and low-cost airlines, which will come in handy not just for Air India, but also for Air India Express and AirAsia India, which is in the process of merging with Air India. In his own words, Wilson has worked in 12 roles across 6 countries in 3 continents. Air India will count on this to help revive the fortunes of the Maharaja.
यार मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
In his farewell note to his former company Scoot Air, Campbell said there are mountains to climb in his new stint. Meanwhile, for markets, it has been a downhill journey. Investors who thronged the markets during the COVID-19 induced sell-off are looking for cover. Rising interest rates, inflation worries, and the geopolitical situation have taken a toll on their sentiment. Our next report takes a look at how asset classes have fared thus far in 2022 and the road ahead for equities amid headwinds.
The risk of sentiment has gripped the investor psyche, which has spared no asset class thus far in 2022. Not just equities, but investors across most asset classes, including cryptocurrencies and metals, have seen negative returns on their investment. A massive sell-off in cryptocurrencies, for instance, wiped over $200 billion of wealth from the market in just 24 hours. While Bitcoin plunged 10% its lowest level since December 2020. Ethereum dropped as much as 16% on Thursday, May 12. Thus far in 2022, Ethereum has cracked 45%. Meanwhile, among equities, the US indices have sunk the most as fears of steeper rate hike coupled with recession-plagued markets. Back home, the Indian benchmark indices seem to have fared comparatively better so far. Bond markets, on the other hand, have seen the India 10-year G-Sec yield rise from 6.01% a year ago to 7.25% now. Meanwhile, retail inflation surged to an 8-year high of 7.8% in April. Analysts say these negative returns have largely been triggered by panic selling by new investors who exited in droves in the backdrop of rising interest rates, inflation worries, and the geopolitical situation.
Across the world, a lot of new investors have come, which are basically they are all millennial. Okay. So they look for something quick gain. So as contrast to the traditional investors, if a risk comes in equity, go to gold, silver, risk, less conservative asset classes, less risky. So they are the one who used to jump gold, silver, and not equity show some risk. Now, this market is largely incrementally dominated by new investors, millennials, sitting at home on computer, doing trades on their own. They want a quick returns. So, even if equity goes down, they are not willing to chase silver and gold. That is the reason for silver and gold to underperform. Last 2 years, people have a very bitter experience of seeing this crypto falling 30%, 50% in 6 months. So it has become, even for the youngsters, new generation, it has become an extremely risky asset classes. It is not the cup of the tea for the young generation because of the lumpiness, illiquidity. Then fixed assets, fixed income securities, which they give only 5 to 7% return. That is also not cup of the tea. So that is why all these asset classes are in favor. And because of the economic fundamentals with which the equity asset class is highly related, is weakening.
Analysts expect equity markets to stage a recovery in the later part of the year as these new investors make a comeback.
This is why I am bullish on the equity, because of these problems with other asset classes, again, all these new investors, millennials, they will come back to in equity in a very big way. So right now that is also down because of the inflation, war, oil price, profit booking, all that. But it will bounce back because other asset classes have these problems.
That said, the near-term texture of the overall market remains weak despite intermittent bounce backs. According to Anand James of Geojit Financial Services, there is a low probability of a breach below 15,671. Pullback rally can lead the Nifty to 16,220 and consolidation in 15,945 to 16,090 is the key. There seems a low probability of an all-out panic-driven collapse or a breach below 15,671. The reaction rally that could unfold thereof has room for upside till 16,220. However, consolidation in the 15,945 to 16,090 region is the key for setting the course for a vertical rise to the 200 DMA at 17,251. In the week ahead, investors will focus on the likely listing of LIC on the bourses on May 17. India's largest insurance company set its issue price at 949 rupees per share. That apart, primary markets will stay abuzz with Paradeep Phosphates and Ethos initial public offers. Lastly, the last leg of March quarter earnings will see more than 400 companies announcing their quarterly report card this week. Some of the prominent ones include Bharat Forge, Bharti Airtel, DLF and ITC.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है Investing made easy and reporting with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the markets, let us move on to India's nascent electric passenger vehicle industry. Most consumers who want to buy EVs have one thing to ask: how long the battery will last in one charging. This has also given rise to range anxiety. Let us know more in our next segment.
Have you ever gone out in your petrol car on a highway and worried about not having enough fuel in the tank? Perhaps not, because petrol pumps, especially in urban India, aren't that hard to find. So, the next refill is always easy to get. But electric vehicle owners aren't that lucky yet. In case of EVs, this fear of not having sufficient charge for the vehicle to reach its destination is referred to as range anxiety. It is linked to how far the EV can travel on a single battery charge and the availability of charging points. That is why the largest player in India's nascent electric passenger vehicle industry recently unveiled the long-range variant of its Nexon model. The new Nexon EV Max offers a driving range of 437 kilometers. Tata Motors also plans to launch electric cars with a minimum range of 500 kilometers. Range anxiety refers to an EV owner's fear that the vehicle's battery does not have sufficient charge for it to reach the destination. It is linked to how far the EV can travel on a single battery charge and the availability of charging points. According to JD Power, the relatively limited driving range of many EVs and the lack of charging infrastructure in many geographies are the primary reasons people do not buy EVs, even if they seek to be environmentally conscious and have the necessary finances. For the owner of an EV, this anxiety can particularly kick in when embarking on an unplanned or emergency trip, which might exceed the range of the EV in question. Also, remember that vehicles aren't just meant for the daily office commute, which typically takes place between 2 points within the same city. What if you want to go on a long drive? Or, as many Delhiites do, drive up to the hills during a long weekend? the owner of a conventional car or bike wouldn't think twice given the ubiquity of petrol pumps. But an EV owner will. There can be two broad solutions to this problem: increased battery efficiency and expansion of charging point networks. In any case, addressing this problem is necessary if we want to accelerate EV adoption, because ultimately the driver's trust is critical. A prospective owner must be confident that their EV has sufficient battery capacity to begin with. And in case they do run out of charge, they will be able to find a charge point on the road that is both convenient and reliable. However, finding a solution to these two problems is a work in progress. Increasing battery efficiency beyond a certain point will require costly and time-consuming research, while charging points have their own challenges that are typical when setting up any infra. Still, with time and increased EV adoption, progress will indeed be seen on both fronts. Here's a glimpse of the challenges involved. India's 2030 vision of e-mobility states that 70% of all commercial cars, 30% of private cars, 40% of buses, and 80% of two-wheeler and three-wheeler sales will be electric by 2030. According to a CEEW Center for Energy Finance study, this would translate into 102 million EVs. Also, deploying 102 million EVs by FY30 would need 2.9 million public chargers. According to Vahan 4 data cited by an agency report, as of 25th March 2022, a total of 1,742 public charging stations were operational in India. However, there is another solution. Battery swapping can tackle range anxiety, and it might prove to be very efficient, especially with regard to certain types of EVs and in certain geographies. Why? Well, as a previous Business Standard Morning Show episode had explained, it is easy to establish a dense network of swapping stations even in packed urban areas. Not to mention, electric charging takes time and Indian cities lack the physical spaces needed to accommodate hundreds of charging vehicles, which is a sight that could become all too common once EVs become mainstream. Basically, you take your EV, most likely a two-wheeler in this case, to any battery swapping station and instantly replace your depleted battery with a fully charged, ready-to-go battery. But battery swapping too is a work in progress with its own set of challenges.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Road transport pollution is responsible for over 20% of all CO2 emissions. That's all for today. For more news and analysis, log on to businessstandard.com. We'll be back tomorrow with our next episode. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.